We've seen both the benchmark topics as well as the Nikkei 225 now rebound to levels we saw prior to April 2nd, which was the day that Trump announced those reciprocal tariffs. How much macro and earnings risk, though, is still on the table for Japanese corporates? And realistically, for the year ahead, how much more upside can we see for Japanese stocks?
Yes, so after the initial spike in volatility that we saw from, say, April, well, in Japan time, April 3rd through to the market bottoming in April 7th, we did adjust our numbers, and we adjusted them over that 5th, 6th weekend. So we brought down our EPS estimates for topics by about 10%. Now, a large part of that was a change in our dollar yen assumptions. We moved from 155 down to 145, which is pretty much where we are at the moment today. But we did make allowances for tariff impact and also for a slowdown in GDP growth. So our targets based on those revised numbers, we're looking for a 12-month target for topics of 2,800. So some upside from here. But yeah, I think for ourselves and for other market participants, there is just so many known unknowns out there at the moment that it's very difficult to get your hands around it. I think if you look at what the market seems to be doing, and if the strong start that we've seen in Japan today holds, this will be the 8th consecutive up day that we've seen in Japan since about the 21st of April. I think the market, the view back in the first week of April was that this could escalate into a global trade war with no exit ramp at all. Now, I think the view now is that there's perhaps a bit more pragmatism from the main actors, and even if there is a period of weakness coming up on the macro data, that there should be some sort of way through this. So the view that we had at the start of April, and I think the view that we have now are very different. And it's sort of similar to what we saw, say, sorry, I interrupted you, but it's sort of similar to what we saw during, say, the sell-off after COVID or the start of the COVID pandemic. A very short, sharp market correction, a reappraisal of the worst case scenario that was in that sell-off, and then the market started to recover quite strongly from there. So it feels quite similar to that sort of COVID period.
Okay. Bruce, talk to us a bit more about the way through for Japanese companies to keep investors on board, right, which is what this whole corporate governance drive is all about, right, rather by increasing divs or doing more share buybacks. And for small and medium-sized companies, I know you've done a bit of digging and a bit of research, right? There's a very unusual practice that they engage in, and I'm probably massacring the pronunciation, but is it kabunushi yuutai? So it's like, cash dividends, fine, have at it. In addition to that, hey, how about discounts or coupons or vouchers? And on the surface, it may seem small or insignificant, right? But for a country where cost of living, right, and inflation is starting to be such a problem with this whole weekend trend, even little tokens like that, I think this is what it looked like to me, right, mean a lot.
Yeah, kabanushi yuutai, and your pronunciation, Martin, was pretty good. It's basically, it's sort of shareholder benefits or shareholder perks. And if you look at the Japanese market, about a third of listed Japanese companies offer some sort of kabunushi yuutai program. And it's mainly for retail or individual investors who are domiciled in Japan. And depending on the number of shares that you own, up to a certain limit, when you own them and for how long you've owned them for, you do, as a Japanese domiciled retail investor, get certain benefits. Now, that can include discounts to Tokyo Disneyland, or discounts to baseball games, or factory tours, discounts on ASICs training shoes, etc. There's lots of different programs in place. And as I said, it goes across a third of the market. Now, for your viewers, why should they care if they're not based in Japan and they're not a retail investor? The reason they should care is this. Companies with kabunushi yuutai programs, specifically amongst the small mid-cap part of the Japanese market, they trade better than those companies that don't, and they trade with better volatility, lower volatility, and they have higher valuations. So, if you're a foreign investor looking at Japan and you don't really understand what the yuutai program is for the stock that you're looking at, it may screen that it's got a higher valuation than its peers, that it's been outperforming its peers over a significant period and should therefore correct. But I think you have to understand what's actually involved in those yuutai programs, because it's very specific to the stock and it's very specific to the retail investor base of those companies.